Well, folks, with the Federal Reserve just seemingly insistent upon destroying my gains, I guess it's back to ramen. Oh, would you look at that? The market's actually a little bit green today. Maybe I can treat myself to an item off the Value Picks menu at McDonald's.
Okay, so that was a joke. I'm kidding. I'm fine. But I did lose quite a bit of money on my investments. A lot. At least what's a lot for me personally. Sometimes I'll post like jokes on my Instagram story about certain investments going down in value. Like one time I put out a story asking anybody if McDonald's was hiring as a joke because Bitcoin went down in value. And then I had one of my viewers message me and basically say like, man, I don't know what happened to you. You used to be, talking about investing in ETFs and just like general good personal finance stuff. But now you're all in on all this risky stuff. And I was like, wait, what? Where did you get that information? I've literally showed you guys my entire investment portfolio. Most of it is in ETFs. And yes, I do have some crypto and I do have some individual stocks, but I am not all into those things. I have very comfortable allocations into those investments. So anyway, I'm doing fine. Just wanted to make that very clear. But sometimes you see people post videos like, I just lost 500K on my investments. And I'm like, man, it sure would be nice to lose like $500,000 and then just make like a lighthearted video about it. But alas, for us normies, let's talk about what happened to my portfolio here and see if there's any lessons that we can learn from it. For those of you who've been watching the channel for a while, you'll know that my investment portfolio value increased over $100,000 sometime back in November. And at that time, indexes were at a nice high. Individual stocks like Tesla were just absolutely killing it. And even crypto was way up there at an all-time high. So everything was just doing absolutely amazing. I mean, what could possibly go wrong? Well, ever since then, in just a few short months, I've lost over $10,000 in my portfolio value. And like I said, for me, this is a lot of money. $10,000, it makes a difference. But kind of contrary to what I just said, I actually don't care about this at all. I'm actually just chilling. And that's because this wasn't actually a real loss. So the goal of this video is twofold. I want to, one, share with you what I've learned about losing money on my investments over the years. And two, I want to continue to be transparent with you. I don't want to just show you my investment portfolio when it's at all-time highs. That would just be BS. My portfolio value is going to fluctuate a lot. Sometimes it's going to be way up. Sometimes it's going to be down. And I'm going to show it to you either way because that's what the world of investing is like. And there's lessons to be learned either way. If you're new to investing, the first thing you need to know is you can't get into this expecting it for it to just be a straight ride up. If you happen to know any investment that just goes straight up and to the right with no dips whatsoever, please let me know. I'd love to hear about it. But for every type of investment I'm aware of, this is the name of the game. There's ups and there's downs, and you got to be able to handle both of them. So let's talk a little bit about what happened here using Tesla as an example. So for me, I started accumulating Tesla mostly from about March-ish to about September. That kind of makes up the bulk of my buying for Tesla. And then I also did do some buying right before this run up and then kind of tried to grab it under 1,000 if I could. I like to now in today's times, I mean, I don't think we're gonna see these numbers again. If we did, I would be backing up the truck, but I like to try and buy it under $1,000 now if I can. So having a cost basis somewhere roughly in this region here, when Tesla ran up to $1,200, I was sitting on a very nice gain, right? But then Tesla proceeded to fall down to about $900-ish right here. So what happened overall? Well, first I had gains in this run up, right? But then I kind of lost those gains over time as we came down to here. So my question to you would be, in this scenario, what has happened? Have I made money or have I lost money at the end of the day? We can assume that, let's just say I have an $800 cost basis. I think it It's lower than that, but we'll just say that's what it is for the purposes of this example. After this run up and then this fall, did I lose money or did I make money? Well, it looks like in that scenario I would have made money because it went up and then came down, but it's still higher than where I bought it from. But if we're being technical, which we should be, I haven't made any money. And I also haven't lost any money either. What I'm about to tell you is one of the most difficult concepts for people to wrap their heads around in investing, and that is the concept of unrealized gains and unrealized losses. So an unrealized gain would be something like this. If I bought Tesla here and then it increased to here, well, I would be up 17% on that investment. Did I actually make that money? Well, if I haven't sold this investment, then actually, no, I haven't made this money yet. Because what happens if I held it to this period of time? Well, now my investment is down 13%. Now, have I lost money? That depends if I have sold this yet. If I haven't sold it yet, well, then Tesla has proceeded to go back up again. So now I would be up about 7% on my investment. And so an unrealized gain or loss is this increase or decrease in value of your investments that you experience before you decide to sell it. And it's called unrealized because you haven't realized it. You haven't made it real until you actually sell it. So when I say that I've lost money, I've lost gains on my portfolio, I actually haven't lost anything. And I also haven't gained anything because I haven't sold anything yet. So if you don't become familiar with this concept, there's a good chance you're going to lose your mind in the market, because just like I showed you how you could be up here, down here, and then back up again, if you think that's actually how much your net worth is tangibly fluctuating, you're gonna go crazy. To prevent myself from going crazy and seeing it this way, I only really think about two things. I think there's only two things that are actually in your control. You can control the price you are going to pay to buy something for, and you can control the price you're going to sell something for. So price action, what we see here on the right-hand side, all the different orders of people trying to sell Bitcoin in this case and people trying to buy Bitcoin in this case, creates the actual price for something like Bitcoin or a stock or whatever it is. And that's what causes it to fluctuate up and down. You can see here where it fell a lot, you would have had much more orders here, much more people trying to sell it than there were people trying to buy it. So that basically drives down the price. It's a battle between buyers and sellers. This is what creates price action. And price action creates opportunities for us to take advantage of, because price action creates panic selling as well as FOMO buying. Panic selling happens because people see the paper value of their investments going down in value. So for example, let's say that you bought Bitcoin somewhere like here, and then you had your investment proceed to drop by about 50%. You probably thought to yourself, oh my God, I am such an idiot. First of all, just don't talk to yourself like that. Be nice to yourself. Second of all, this wasn't actually a real loss unless somebody decided to sell it at the very bottom right here. Because after that, Bitcoin proceeded to then rally by 135-ish%. So all in all, you could have been up something like 15% on your investment in that span of time. But unless you sold up here, well, now we're back down again. So in a lot of ways, these fluctuations in price, especially in the short term, especially over days or weeks or months, even over a year or two, they can be noise. But in the past, I've made the mistake of allowing that price action, of allowing those unrealized losses to actually scare me out of an investment. But nowadays, I see price action as something for me to take advantage of. Instead of being scared out of something, I'm usually excited to get into something at those low prices. Honestly, the world of investing is a little bit dog eat dog. You have to remember that there's somebody on the other side of every single trade. When you buy something from someone at a low price, there's a chance you might be picking up something from somebody who is scared. And when you sell something at a very high price, there's a chance you might be selling it to somebody who's FOMOing into it at the top. Now, what we're talking about here, I think, is much more applicable to individual stocks and crypto. It's not so much applicable to index fund ETFs. For those, I just personally continuously dollar cost average my way into the market. That happens to work phenomenally well for index funds, which is great because it's super easy. You don't even have to think about it. Just put money in, walk away. But for individual stocks and for crypto, my philosophy is being a little bit more opportunistic. I only really buy something when I see it at a good price. So when I saw Tesla trading up in this range earlier last year, I knew that when it fell way down to here, this was a great spot to start picking up some shares, and all throughout this period as well. Great spot in my opinion. And the reason I have this approach is because, remember, I think that we can only control two things: what price we pay to buy something for and what price we pay to sell something for. So in this case, I am controlling that one thing. I'm controlling what price I pay for this specific investment. But how do I determine what I think is a good price to pay for something? I mean, how do I know buying Tesla at these levels is actually a good price to pay for it? Like, what if it kept going down? All kinds of different scenarios could have played out. Well, the simplest way I can put it is you basically have to ask yourself, if I buy this for this price now, how likely do I think it is that I can sell it to somebody else for a higher price in the future? That is, in a nutshell, how investing works. It's obviously extremely more complex than that, and there's a ton of nuance to actually being able to do that successfully. And so I think it is 100% up to me to actually do the work and build an investment thesis to determine how likely it is that I can sell something for a higher price in the future. And so some examples of doing the work can be something like this. So this is a chart that was produced by Gary Black. I mentioned him in a previous video. I would definitely check him out on Twitter if you are a Tesla investor or you are interested in learning more about investing in Tesla. He's amazing, and this is a relatively simple analysis he has done to basically help project the future growth of Tesla. So being able to produce or understand financial modeling like this is going to greatly help you feel comfortable making investments into individual stocks. If you look at something like this and you have no idea what you're looking at, that's totally okay. That's totally okay to admit yourself, I am out of my depth here. This could be a really exciting thing for you to research. This could be a really exciting adventure for you to embark upon to really improve your understanding of building an investment thesis. But before you start building models like this one, I think a great place to start is to just look at the financial statements of particular companies you are interested in. When they release a quarterly report, it's a great idea to go download it and then just read through it. If you're new to investing, you might not understand everything, but the more you do this, the more your knowledge is going to improve. And honestly, these days, there's a ton of retail investors, meaning you and me, who do not do this stuff. They do not actually look into their investments and try and understand them. So you will have an information advantage above a lot of people. Like, for example, I see a ton of people sharing their opinions about Tesla and stuff like that, and that's fine. I encourage everyone to, be able to speak their mind, but if you can't even name off the top of your head Tesla's main factories, it's a little bit hard to have an informed opinion about the company because you are at an extreme information disadvantage if you don't know that very basic information. Okay, so far we've been talking about unrealized losses from the perspective that we shouldn't be afraid of them. But what if you actually made a bad investment? How do we determine whether we actually made a mistake or whether we're just scared? I think the best way to determine that comes from what I just said. Do you actually have an investment thesis for what you are holding? If you're holding something where you have an information disadvantage, you're probably going to make mistakes. Like if you're holding Tesla stock and you don't know the location of their main factories, you're probably going to make mistakes. Whereas on the other side, if you have a very deep and strong understanding of the companies or assets that you're investing in, you can be very cozy when the market goes up and down. And finally, the last thing that gives me a lot more comfortability when I am facing volatility in the markets is sticking to responsible position sizing. I mean, I really can't stress this enough. If you have a huge chunk of your assets in something that fluctuates wildly in value, and one minute you have a massive unrealized gain and the other minute you have a massive unrealized loss, that's going to be stomach churning for sure. And I mean, hey, it's a free world. You do whatever you want. But personally, I only stick to allocations of things that I am very comfortable with. And this allows me to not really even bat an eye when I see my investment fluctuate up over $10,000 or down over $10,000. Doesn't really matter to me. And at the end of the day, despite giving up like $10,000 in gains or something like that, my portfolio is still very much up. So anyway, that's how I'm thinking about unrealized losses, unrealized gains, how I'm managing things right now in the markets. I know today was a little bit more stream of consciousness style of video, but I hope it was still helpful and interesting for you. And thank you so much for watching. See you again soon.